At the recent Munich Security Conference, something happened that hasn't occurred in decades. The German Chancellor, the French President, and the US Secretary of State all said almost the exact same thing on the same day in different languages. They all admitted that the post-World War II world order is over. On that very same day, Ray Dalio, the founder of the world's largest hedge fund, published a massive 10,000-word article on X. It surpassed 54 million views within 24 hours. Ray Dalio said one chilling thing: "This is not breaking news. It is the moment I have been waiting for after studying 500 years of history." He believes the current world has reached the sixth stage. The last time humanity stood at this exact juncture was on the eve of World War II. So what exactly does Ray Dalio mean by the sixth stage? And how did the 1930s transition step by step from an economic collapse into a full-blown world war? I'm going to take the real economic data we are seeing right now in 2026 and compare it, item by item, with that era. You can judge for yourself whether today is truly mirroring the eve of World War II. More importantly, is it possible that Ray Dalio's judgment is wrong? And if he is right, how should ordinary people hedge these massive risks and protect their wealth in these turbulent times? Welcome to Stewardship Finance Academy. Our channel specializes in sharing the financial intelligence you will never learn in school, helping you decode global economic trends to make smarter wealth decisions. Please hit the like button, subscribe, and turn on the notification bell so you never miss our weekly updates. Before we dive into the data, if you want to know exactly how to position your portfolio for this massive global shift, I highly recommend joining the SFA Free Stock Investment Masterclass. The link is right down in the description below. Let's first look at what actually happened in Munich. In his opening speech, German Chancellor Friedrich Merz did something very rare. He specifically switched to English to deliver a direct message. He said, "I want to say a few words in English to our American friends in the era of great power competition. But not even the United States has the ability to go it alone." He was essentially saying that the set of rules that has maintained the international community for decades no longer exists. Then he added a critical blow, stating that America's leadership of the world is being questioned globally and may have already been lost. Think about the weight of that statement coming from Germany. Germany is one of the absolute biggest beneficiaries of the US-led order after World War II. For the German Chancellor to say this is equivalent to publicly announcing to their biggest ally that they can no longer protect them. Before even leaving for Munich, US Secretary of State Marco Rubio told reporters that the old world is gone. Case stated, "It no longer exists, and we are now in a new era of geopolitics." This is incredibly revealing. It isn't just rival nations saying the US is losing its grip. The US is admitting it. The world's top superpower proactively announced that the old order is dead. If you look through history, this kind of voluntary concession is extremely rare. Why give up leadership proactively? There is only one reason. The cost of maintaining the order has finally exceeded the benefits. It's like running a business where you lose money every single day and have to subsidize it out of your own pocket. Eventually, you just want out. French President Emmanuel Macron went even further. Back in March 2024, he publicly stated that Europe must prepare for war. But this time in Munich, he dropped a complete bombshell. He stated that France's nuclear weapons should serve as an umbrella for all of Europe. He and German Chancellor Merz initiated a dialogue on European nuclear deterrence, sharing right there on the spot. Think about the sheer significance of this. The last time a nuclear umbrella was publicly discussed as a bargaining chip was during the height of the Cold War. So, put these three statements together. Germany says US leadership may be gone. The US admits the old world is over. France says the rest of Europe can use its nuclear weapons. Even the title of the official annual report for the Munich Security Conference essentially translates to lose-lose or being destroyed. On that very same day, Ray Dalio's article went live. Defining our current world as the sixth stage in his big cycle theory, to put it bluntly, it means there are no rules anymore. Oh, man, right? Major powers are now confronting each other directly, giving no quarter and leaving no room to maneuver. After studying the past 500 years of history, Ray Dalio found that human society continuously cycles between order, chaos, and a new order. Each cycle lasts about 150 years. Our current cycle started with the US-led post-war order in 1945, which was just over 80 years ago. So why is this old order collapsing now? Ray Dalio's explanation is brutally direct. The essence of international relations is not law, it is power. Effective governance requires four things: legislation, law enforcement, adjudication, and consequences. Between sovereign nations, these four things are either completely non-existent or merely for show. The United Nations tried it. The League of Nations after World War I tried it. They all failed. At the end of the day, it comes down to military might. The veto power of the 5 permanent members of the UN Security Council is basically a permanent get-out-of-jail-free card that the victors of World War II gave to themselves. Rules are written by the winners. When the winner is no longer the absolute strongest, the rules begin to break down. Ray Dalio also pointed out something that most people overlook regarding major power conflicts. It is rarely a black and white choice between total peace and total war. There are 5 distinct forms of war: trade war, technology war, capital war, geopolitical war, and military war. The first 4 usually start first and last for about 10 years. Then they have the potential to turn into the 5th, a war with live ammunition. His judgment is that the first 4 forms have already been fully initiated between the United States and China. You might think that war just means fighting on a battlefield, and wonder what this has to do with your wallet. But Ray Dalio's incredible insight is that before the first bullet is ever fired, a secret war has already been fought for a decade. Most people only realize there is a war when they hear the gunshots. Smart money started moving 10 years prior. But under what conditions does an economic war truly turn into a hot war? Ray Dalio gave a very ruthless answer, and his theory is currently being verified step by step. He stated that an all-out war requires 2 conditions to be met simultaneously. First, the military strength of both sides must be comparable. Otherwise, the weaker nation wouldn't be stupid enough to strike first. Second, there must be an irreconcilable core disagreement over an interest that concerns the very survival of the nation and issue, where neither side can back down. He directly pointed out that the situation in the world today that best fits these 2 conditions is the US-China dispute over Taiwan. Both sides are run by smart people. Both know that fighting will carry a massive, devastating cost. So why might they still end up going to war? This brings us to a fundamental concept called the prisoner's dilemma. 2 major powers capable of mutually destroying each other must believe at every single moment that the other side will not strike first. Only then can peace exist. But this kind of trust is nearly impossible to establish. It is like 2 people holding a gun to each other's heads, verbally agreeing to put the guns down. The problem is, who puts it down first? If the one who lowers their weapon guesses wrong, they are dead. Add to that an escalating effect called tit for tat. You sanction my microchips. I restrict your rare earth minerals. You raise tariffs. I retaliate. Every retaliatory step makes it exponentially harder to back down on the next step. It's like 2 cars driving head-on at 100 miles an hour. Whoever swerves first loses face, but if neither swerves, they both perish. Game theory calls this the game of chicken. The name is funny, but the reality is terrifying. To be honest, reading this part of Ray Dalio's analysis made me deeply uncomfortable. He listed 4 reasons why, even knowing it's a foolish move, nations will still proceed toward conflict. Those reasons are the prisoner's dilemma, the escalation flywheel, face-saving cost of a declining empire, and misjudgments caused by overly fast decision-making. He also specifically added that dishonest and emotional leaders greatly increase the risk of fighting stupid wars, especially when they control the media. I'll let you figure out who he might be talking about. I want to add a bit of my own thinking here. Ray Dalio is actually pointing out a much deeper structural problem. Democratic systems have a fatal weakness in these great power games. The decision-making cycle of elected leaders is only for years, but the cycle of great power competition spans decades. Short-term decision made simply to win an election today could easily push a country into a hot war 10 years down the line. In contrast, an authoritarian state can make and execute 50-year plans. In game theory, players capable of long-term planning have a massive structural advantage over short-sighted players. However, Ray Dalio isn't just sounding the alarm. He offers a prescription. He says power is like a hidden knife. Most of the time it is best not to show it. Having power is a good thing, but you must respect it. You should never fight wars you are going to lose. Sounds logical, but if nations actually followed this logic, wars wouldn't happen. The problem is nobody does this, and human history proves it. To prove this point, Ray Dalio brought out the ultimate case study, World War II. What truly happened in the 1930s is far more unsettling than the sanitized version you read in your high school textbooks. Ray Dalio made a core discovery. When the economy collapses, populism rears its head. It becomes all about our country is the absolute best. But that is only the surface level. If you look closely at the historical data, you find a much deeper pattern. It is not poverty that breeds extremism. It is the rapid transition from wealth to poverty that breeds extremism. Countries that have always been poor are relatively stable because the citizens don't feel a sudden sense of loss. What is truly dangerous is the massive, sudden collapse of the middle class. When someone who used to live a highly comfortable, decent life suddenly finds themselves standing in a breadline. Their anger is 10 times stronger than someone who has always been poor. Ray Dalio didn't state it this directly, but all his case studies point to the exact same conclusion. Destroying the middle class is the ultimate fertilizer for political extremism. Whether a country swings to the far left or the far right simply depends on how thick that country's democratic foundation is. Germany, Japan, Italy, and Spain all took a hard right turn towards fascism. The US and the UK became much more populist than before, but at least their core democratic institutions didn't completely collapse. What I'm going to say next might make you uncomfortable, but the economic data of fascist regimes back then actually looked incredibly impressive at first. Let's talk about Germany. When the Great Depression hammered them in 1929, their unemployment rate soared past 25%. After Hitler came to power in 1933, he heavily militarized the economy and threw money around like crazy. In 5 years, unemployment dropped to almost zero. The average annual GDP growth exceeded 8%, and per capita income rose by about 22%. If you place those numbers in any modern country today, it would be hailed as an absolute economic miracle. But what was the cost? Its growth was entirely propped up by military spending. Banks were forced to buy government bonds, and the central bank relentlessly printed money to foot the bill. Many people refused to face this truth. Germany's economic model was undeniably effective in the short term. Not because it was morally right, but because concentrating all of a nation's resources in one single direction genuinely yields very high efficiency in the short run. It's exactly like a person living a lavish lifestyle for 3 years by maxing out credit cards. It feels great, but the bill will come sooner or later. And for Germany, that bill was total war. Look at Japan. It's an island nation lacking natural resources. Exports were its absolute lifeline. The Great Depression hit, their exports plummeted by 36%. The economy collapsed and militarism became hugely popular. Ray Dalio said something quite jarring about this. He noted that from a strict cost-benefit perspective, Japan's choice to plunder resources militarily might have been more cost-effective than normal trade at that specific time. It sounds incredibly cold-blooded, but it is precisely Ray Dalio's most valuable method of analysis. When he looks at history, he doesn't calculate the moral ledger. He calculates the economic one. When normal trade channels are entirely closed off, military plunder becomes a rational economic choice for a starving nation. I am not defending aggression here. I am saying that if you push a country into a total economic dead end, there is a very high probability it will choose violence. That rule has not changed one bit to this day. What about the United States during that time? In 1930, the US passed the Smoot-Hawley Tariff Act, ignoring the joint desperate opposition of 1,028 economists, and imposed tariffs on over 20,000 types of imported goods. Roosevelt took office in 1933 and started pouring massive amounts of money into public infrastructure. To pay for it, the highest individual income tax rate soared from 25% to an astonishing 79%. The result is from 1933 to 1936, the stock market surged by over 200%, and annual GDP growth averaged 9%. 3 countries took 3 radically different paths, but Ray Dalio discovered a common pattern among them all. Before live ammunition is ever fired, there is usually about 10 years of intense economic warfare. Remember this pattern? Because it is crucial for your portfolio today. During World War II, what truly ignited the attack on Pearl Harbor was not a sudden random event. It was a meticulous step-by-step process, scaling from economic warfare into a hot war. And the process playing out right now in 2026 is so similar to the 1930s that it should send chills down your spine. If you want a systematic way to monitor these macroeconomic changes and break them down into actionable investment steps, remember to subscribe to this channel. Seriously, register for the SFA Free Stock Investment Masterclass using the link in the description. Ray Dalio listed an inventory of modern economic weapons, freezing assets, cutting off financing, and embargo blockades. But there's a deeper logic behind this list that most investors completely miss. Economic sanctions look like a peaceful measure. There is no declared war. We just aren't doing business with you. But Ray Dalio's insight is that between sufficiently severe economic sanctions and actual kinetic war, there is fundamentally no difference. Think about it. Cutting off 80% of a country's oil supply has the exact same net effect as dropping bombs on its oil fields. Both actions cause the targeted economy to collapse. The only difference lies in the speed. Bombs destroy an economy in a day. An embargo takes a year, but the end result is identical. The path of US sanctions against Japan is a textbook historical example of this. In 1940, the US restricted the export of critical materials to Japan. In March 1941, the Lend-Lease Act officially ended American neutrality. By the summer of 1941, Roosevelt delivered 3 devastating blows in a row. He froze all Japanese assets in the US, closed the Panama Canal to Japanese shipping, and imposed a total devastating oil embargo. This singular slash directly cut off 80% of Japan's oil supply and 3/4 of its total international trade. So why do you think Japan sneak attacked Pearl Harbor? It wasn't because their leadership suddenly went crazy. It was because they were backed into a corner and only had enough oil reserves to last for 2 years. 2 years. If you were leading a nation facing that, what would you do? While studying this history, I kept asking myself, did Roosevelt know that the oil embargo would force Japan to take military action? The answer is very likely yes, and many prominent historians believe exactly this. Anti-war sentiment in the US was extremely strong at the time. Roosevelt needed a reason, being attacked first, to convince Congress to declare war. If this is true, the implications for our world today are utterly terrifying. Sometimes, economic sanctions are not meant to avoid a war. They are designed to create the excuse for one. Ray Dalio formulated a historical rule. When a weaker country is pushed to the point where backing down means losing its absolute core interests, it will choose to go to war even if the odds of winning are slim to none. Therefore, economic sanctions sometimes actually ignite the fire. You think you are just applying diplomatic pressure, but you are actually pushing the opposing nation off the edge of a cliff. And what happens to your money after a war officially starts? In World War II, all participating countries implemented strict rationing, heavy price controls, and severe capital controls. The highest tax rate in the United States soared to 94%. As for the stock market, there was a key turning point you need to know about: the Battle of Midway. Before 1942, the Axis powers had the upper hand. After Midway, the situation completely reversed, and the Allied stock markets surged 87% from their absolute bottoms. Meanwhile, the stock markets in Japan and Germany were completely shut down by the government. When they finally reopened 5 years later, the value of those equities had essentially gone to zero. What Ray Dalio is giving us here is not a history lesson. It is a financial warning. If the assets you hold today are betting on the wrong side of this global shift, your financial outcome will be no different than those wiped out in the 1940s. All right, the history part is over. You might be thinking, what do events from 90 years ago have to do with my portfolio today? I'm going to show you a few sets of real data from right now, in 2026. You can judge for yourself if the parallels are there. Number one, tariffs. In 1930, the Smoot-Hawley Tariff Act forcibly raised taxes despite the opposition of over 1,000 economists. Today in 2026, the average US tariff on China has reached 47.5%, covering 100% of all Chinese exports. China's retaliatory tariff currently sits at 31.9%. But there's a critical number here you absolutely must know. A research report from the Federal Reserve Bank of New York confirms that 90% of the economic burden of these tariffs falls squarely on American companies and American consumers. It is not paid by China. Let me put that more bluntly. It is equivalent to the US government imposing a massive hidden tax on its own citizens, and then telling you on the nightly news that this is punishing a foreign adversary. Number two, debt. Currently, the US national debt stands at a staggering $38.65 trillion. When you go to sleep tonight and wake up tomorrow morning, the national debt will have grown by another $6.4 billion. That is $6.4 billion being added every single day. The Congressional Budget Office predicts that by 2036, public debt will reach 120% of GDP. That surpasses the all-time high set directly after World War II. The interest expense on that debt alone is now approaching $1 trillion a year. What does this actually mean in practice? It means the money the United States spends just paying interest on its debt in a single year is now more than its entire military budget. The world's largest military empire has an interest bill higher than its defense spending. Does that look like the late-stage symptom of a declining empire to you? When I first saw that number myself, I was stunned for quite a while. Number three, gold. The price of gold hit a breathtaking all-time high on January 28, 2026. It's touching $5,602 an ounce. Central banks worldwide purchased 863 tons of gold in 2025. That marked the fourth consecutive year of central bank purchases exceeding 800 tons. Poland alone bought 102 tons, explicitly citing national security as their primary reason. But the statistic that really makes me unable to sit still is this. 57% of these global gold purchases are completely undisclosed. This means that central banks around the world are secretly hoarding physical gold. Let's pause here and think critically about this. When central banks buy gold, it is entirely different in nature from when you or I buy a gold coin. You might buy gold just to preserve purchasing power, but central banks buy gold for only one reason. They are hedging against a catastrophic systemic risk. What is this risk called? It is the collapse of sovereign currency credit. To put it bluntly, central banks around the world are voting with real money. They no longer fully trust the US dollar system. That is the true underlying meaning behind gold hitting new highs. It's not that gold has suddenly become more expensive. It is that fiat currencies are becoming worthless. Number four, the global arms race. For the first time in history, all 32 NATO member states have finally met the 2% of GDP defense spending target. The average across the alliance is now 2.67%. Furthermore, the 2025 Hague Summit set a radical new target. Military spending across the alliance must reach 5% of GDP by the year 2035. Poland is already leading the charge at 4.48%, the highest in the world. 16 EU countries have actually activated special fiscal exemption clauses explicitly to fund this rapid military expansion. You might not have a good conceptual grasp of these percentages, so let me translate it for you. What does spending 5% of your total GDP on the military actually mean? At the absolute peak of the Cold War, the US military budget was only 6% of GDP. Europe is currently sprinting at a speed of militarization approaching peak Cold War levels. And they are using the pretext of special fiscal exemptions, so this borrowed money isn't counted in their official fiscal deficits. In plain English, they are printing and borrowing money to rapidly expand their militaries, exactly the same way they did in the 1930s. All right, let's go down Ray Dalio's 5 types of wars and check them off the list one by one. Trade war, 47.5% tariffs, check. Tech war, extreme export controls on advanced chips and adding over 65 major Chinese companies to the entity list, check. Capital war, aggressively prohibiting transactions in the securities of Chinese military industrial companies, check. Geopolitical war, the massive justice mission, 2025 military exercises in December. 2025 that involved 130 military aircraft, 90 crossing the median line of the strait, 14 warships, and 24 rockets fired. Check. And what was the official US response to that? $11.1 billion in expedited arms sales to Taiwan? Also check. Out of the 5 types of war Ray Dalio identified, 4 are already actively being fought right now in 2026. Now let's look at the 5th, direct military conflict. You're only 1 step away. But here's the catch. This step might actually never be taken. Why? Because there is one crucial element that absolutely did not exist in the 1930s. And this thing is exactly the biggest blind spot in Ray Dalio's entire 500-year theory. That element is nuclear weapons. Mutually assured destruction has fundamentally rewritten the game theory formula for military conflicts among a superpower. In the 1930s, major powers could fight a little bit just to test the waters. If they lost, they would cede some territory and pay some financial reparations, but the nation state would still exist. But today, a nuclear war offers absolutely no option to test the waters. Once those buttons are pressed, there are no winners. There are only losers to varying catastrophic degrees. The Cold War is the perfect historical example. Between the US and the Soviet Union, all 5 types of war existed concurrently. The ideological confrontation was even more extreme than the US-China rivalry is today. Yet for a full 45 years, they did not dare to clash directly head-on. Nuclear weapons didn't make superpower conflicts disappear. They simply made an all-out hot war an unbearable option. This is the biggest blind spot in Ray Dalio's framework. His model is built on 500 years of history, but nuclear weapons have only existed for the last 80, using a 500-year historical sample to predict. A modern game where the rules have been fundamentally rewritten is deeply flawed. There is a term in statistics for this called a structural break, which perfectly describes our current situation. You cannot use traffic accident data from the horse-drawn carriage era to accurately predict traffic safety in the era of autonomous driving. The logic is identical. Also, economic globalization today vastly surpasses anything seen in the 1930s. The supply chain of a single iPhone spans 7 different countries. The financial cost of a complete economic decoupling is something that couldn't even be imagined back then. But this must be viewed from both sides of the coin. Interdependence indeed increases the cost of starting a conflict. But at the exact same time, it radically increases the lethality of economic weapons. Precisely because you rely on my advanced chips, and I rely on your raw rare earths, trade and tech wars can cause massive immediate damage to both populations. Interdependence is a double-edged sword. It makes an all-out war much more expensive, but economic warfare far more brutal. Now, there's a third very interesting question regarding Ray Dalio's recent actions. Starting over half a year ago, Ray Dalio has been publicly shouting about the value of gold on various media platforms, telling everyone to aggressively buy. He explicitly recommended that gold should account for 10% to 15% of a retail investor's overall portfolio. However, in the 3rd quarter of 2025, his firm, Bridgewater Associates, actually sold off the US gold ETF, GLD, look at that carefully, telling retail investors to buy while selling it out of your own fund. What kind of move is this? When I first saw this data point, my heart skipped a beat. But the mystery was fully revealed in the Q for 2025 13F filing that was released just a few days ago. Bridgewater heavily bought into the gold mining giant Newmont. It seems they felt the physical metal itself was rising a bit too slowly. They decided to directly use operational leverage by playing the mining stocks instead. To put it bluntly, it isn't that Bridgewater is bearish on gold. It's that they think physical gold is growing too slowly. If they are going to play this trend, they want to play it big. You wouldn't make a massive leveraged move into miners without great macro certainty and supreme confidence. Of course, in the offshore or private parts that Bridgewater isn't required to report, there might be many other gold-related investments. We simply have no way of knowing, so you see. Ray Dalio truly aligns his public words with his fund's actions. He says gold is good, and then takes a heavy leveraged position in it. method is just far more aggressive than buying a standard ETF. This is very different from JP Morgan CEO Jamie Dimon. He famously badmouthed Bitcoin a few years ago while his own company's trading desks were buying it up in large amounts. That is true hypocrisy. But Ray Dalio's cycle theory itself has one final fundamental problem. If history is truly predetermined by these 150-year cycles, then what is the point of him writing this warning article at all? He even stated in his own conclusion that the decline of an empire can be prolonged by good decision-making. You see, even Ray Dalio himself doesn't entirely believe in inescapable fate. A cycle is just a macro trend, not a precise prophecy. It is exactly like a weather forecast telling you there is a high probability of severe rain this month. It just can't tell you exactly which day or which hour it will flood. Taken together, Ray Dalio is about half right. The post-war order is indeed ending. 4 types of wars are indeed currently being fought. The historical path of decline does exist. But nuclear weapons have rewritten the endgame formula, and deep economic interdependence has fundamentally altered the cost calculations. His cycle theory has structural blind spots, but its greatest contribution is not in predicting the exact future. It is in providing a mental framework, and, sometimes, the framework is vastly more important than the specific conclusion. Alright, after talking so much about macroeconomic trends, 13F filings, and great power games, you might be thinking, Ray Dalio's company manages hundreds of billions of dollars. What does any of this have to do with my personal retirement account? It has a massive amount to do with you, because the devastating costs of these great power games are ultimately paid for by the wealth of ordinary people. So what should you actually do with your money right now? First, geographic diversification is now vastly more important than traditional asset diversification. Do not put all your financial eggs in one country under one single political system. Ray Dalio himself now lives in Singapore and Abu Dhabi in the UAE. Do you think this is a random coincidence? A man managing hundreds of billions of dollars is voting with his feet to give you the answer. That is more honest than any written analytical report. Second, look strictly at what central banks are doing with their reserves, not what politicians are saying on television. They are frantically buying physical gold, and 57% of it is not publicly disclosed. This is the ultimate macro signal. The physical actions of central banks are more reliable than the mouths of all Wall Street analysts combined. Mouths can tell lies, but real, deployed capital does not. Third, maintain sufficient liquidity. In times of extreme global uncertainty, cash provides optionality. Only when you have dry powder in hand do you have the privilege of waiting for a generational buying opportunity. Without cash, you can only passively take a beating when the market drops. Look at the pandemic crash in 2020. Those who had cash on hand bought the dip and made an absolute fortune. Those fully invested without a cash buffer could only watch their portfolios bleed helplessly in anxiety. Fourth, understand the macro cycle, but do not gamble your life savings on the exact timing. Knowing a financial storm is coming is not the same as knowing exactly which Tuesday it will hit. What you need to do is make sure you have a financial umbrella built, not place leveraged bets on which day the rain starts. You can't realistically carry an umbrella out every single day waiting for a drop. But you also shouldn't throw your umbrella away just because it hasn't rained for a few months. At the end of the day, the single best investment you can ever make is an investment in your own financial cognition. If you are serious about protecting your wealth, click the link in the description and join the SFA Free Stock Investment Masterclass right now. It is the best step you can take today to prepare for tomorrow. Those of you who have watched until the very end are true fans. If you found this analysis useful, please help me out by hitting the like button, subscribing to the channel, and turning on the notification bell. This is Stewardship Finance Academy, turning you into a confident investor. See you in the next video.